Here's the confusing one. If you've got an old employer 401k, that's the confusing one, because sometimes you might have been doing Roth dollars in that and the company was doing a traditional match. And so you actually have two buckets of money there.
A lot of people think they're taking the money out of their retirement account. That's why I like the word transfer. All you're doing is transferring it.
Yeah.
The IRS doesn't care. There's no IRS reporting for this because you didn't take the money. Do not do a 60-day rollover or let your financial advisor say, oh my gosh, you're going to get taxed on this. You're taking the money out. Whoa. If you think I'm taking the money out, we got a problem. Excited to be here with you today talking about mechanics, auto mechanics. Are we like
self-directed account mechanics?
Yeah,
this is not. We're not click and clack. We don't know what we're talking about. I don't know if you need a new carburetor or not, but I know whether you need a transfer or a rollover to fund your self-directed account.
I like it.
And that's what we're going to talk about today. Is like, what account do you set up? And a lot of people come here and you already have a retirement account. You have an IRA somewhere. You have an old employer 401k. But you're like, but how do I self-direct it? What do I set up with you guys? And then how do I get the money over here? We want to close the loop on that question.
Now, are you the bad cop or the good cop in this equation? Because
I'm good cop.
Okay, I'll be bad cop.
I'm good cop on this one.
All right, I'm going to be bad cop then and say this.
That's why you wear the black shirt.
Yeah.
I wear the white. You're like,
I'm
the
black.
devil. I'm like the angel today.
Oh man, that was hard. That was harsh.
I mean,
okay.
You know,
well, let me say
the
this.
Shirt fits.
Yeah, the shirt fits. It must be fitted. All right, let me throw this out. Everybody, this is important. What I need to say this is, I know many of you are like, okay, cool. I have found the right custodian or trust company. They get it. Oh my gosh, this is exciting. We've put this podcast in a series of steps where this would be the next logical feeling. You're like, okay, I'm ready to go. And you just want to call someone and go, make it happen. I'm the same type of guy. I'm just like, oh, I found the right person. Go. Here's where you have to slow down for a minute. The purpose of today's podcast, from my perspective, is you've got to understand a few terms. And you're like, I really have to? Yes. Because you're going to have to call some people maybe. You might have to email some people. You have to say yes or no. And if you don't know these terms and kind of the mechanics of what's going on, and we'll keep this simple, but you've got to know enough to help make it happen.
Yeah, and you got to know enough to know what you don't know, which a lot of people say, oh, I have an IRA. And then we are like, you actually have a 401k. I have an annuity. Well, does your IRA own that or do you personally own it? And so we want to kind of make sure you understand what you have and how you get there. And then you actually do this online. You can call us, but you don't need to. Okay, you can do this fully online in our Directed Connect portal. But it starts with a process. And so let me say out the first thing I want you to do. So if you're already like, guys, I want to self-direct. I got plenty of stocks and mutual funds. I want to do something else. I want to invest in a private asset, a real estate deal, some alternative, crypto, whatever you're into. And you're like, but now how do I do this? The first thing we want to look at is what do you already have? We need to take inventory of what do you have. And what our team thinks, what is just the best thing to do? Get a statement. Your statement says what it is.
It's going to be up in the right-hand corner, and all of a sudden you'll go, oh, that's not what I thought I had. Or it's going to be a big revelation. And another way of, this is really a great opportunity for something, and that's building a little personal financial statement at the same time. You know, just pull it out and go, what do I got right now? You know, and have a line, okay, I've got this old 401k, I've got this IRA. Oh my gosh, I didn't even know I set up an IRA 9 years ago. That's right, I was getting this old statement from who knows what. So this is a chance to do your own personal audit, inventory. And guys, I'll tell you, half of the time, our clients find money. They're like, I didn't even know I had this account over here or what was in it. And so you're really taking ownership and control, and it's very empowering. Yeah. And it's going to make the rest of the process easy. And you'll be like, oh my gosh, the best thing I did was ever start self-directing because I got control.
Yeah. Now, I know some of you are listening and you're probably like, what people do not know what they have. I'm all over my stuff, and we know you. Okay, all right, that's me. All right,
that's one half.
Okay, that's some of you, but I'm just telling you, this video is for everyone else.
He's talking about the engineers, the dentists. I'm talking to the realtors and the online influencers. Okay.
Yeah, they're like, what did I actually set up? Okay, now here's the confusing one. If you've got an old employer 401k, that's the confusing one, because sometimes you might have been doing Roth dollars in that, and the company was doing a traditional match. And so you actually have two buckets of money there. You might say, well, I want to self-direct one bucket. I might want to self-direct the Roth dollars, and in which case you would open up a Roth IRA at Directed IRA. Some of you might be looking at your statement when you got it, and this is your traditional IRA at TD Ameritrade or your SEP IRA at Fidelity. What do I set up at Directed IRA? Well, you would set up a traditional IRA at Directed IRA. You could do a SEP if you want to still do new SEP contributions, but those dollars would get into that account type. So I want to make sure you understand what account type am I opening is a function of what do I already have. Okay, now we can get into changing it, but I just want to say step one is the account you're going to set up at Directed IRA usually is what you already have.
Yeah, and Matt kind of teased you with, if you have this, you're going to do that. Don't worry about what you're going to do yet. We want you to just get some of these terms down and how you may have arrived where you're at right now. Again, getting into the weeds, I just open a great little Google spreadsheet that you can share with your spouse, maybe you have an advisor you're working with or a family member that's helping you. Get a Google sheet going and start writing down the name of the accounts, where they're housed, the account numbers, and what balances you're seeing, and going online and trying to log in, reset your password, and get that statement that Matt's talking about, and then download it and start creating a little folder. And so you're really doing kind of this data room situation where you're building this little data port where you've got everything you have. And then I'd say step two is figuring out what it means. But step one is gather. Get all that stuff. Yeah. Put dollar amounts in, account numbers, and then there'll be a column on your spreadsheet of what the hell is it? And then you're going to IRA, SEP, 401k, Roth, HSA. You could be a variety of things.
Yeah. And so, get inventory. But now we're like, okay, you got to this point of, well, I wanted to self-direct this, so now I'm on your website. What do I open? Well, what do you have? And so I want to come back to that here because this is the threshold question. We typically want to set up what you already have. With a caveat here, you might want to convert to Roth before you start self-directing. We have a lot of clients do that. I want to explain that here in a second. But the first step is, what do you already have?
Okay, well, this week I experienced something very similar. Patty and I are moving some money around. We had some accounts that weren't here at Directed IRA, and we wanted to move them over, and it was fun. Yeah. It was so exciting. So this part, now let's remember, everybody, you've already done an inventory. You've got a list of these, and you've determined what they are to the best of your ability. And if you can't figure out what they are, call. That's cool. But you've got, I've got an old 401k. I've got a IRA. I got a Roth. What's in my 401k? So you can start figuring that out. Now, when you go to our portal and you're going to set up an account and an ID, you're going to now choose the right place your account's going to go. Like you have to have the right account on the other end to receive your money. And we're going to give you that list right now. Yeah. And what would you start with? Like, make the most common.
And sometimes this is very simple. And you guys might be like, guys, you're overcomplicating this. Sometimes it is simple. For example, let's say you have a traditional IRA at Fidelity. You're going to open up a traditional IRA at Directed IRA, okay? We're going to get a transfer form, and we're going to send that money. We're going to tell Fidelity, hey, send $100,000 from Mark's traditional IRA at Fidelity to Mark's traditional IRA at Directed. Super easy, okay, clear cut. You got a Roth IRA at TD Ameritrade. You open up and you want to use some of that money or the whole thing. You open up a Roth IRA at Directed IRA. We're going to do a transfer form. You send us the statement. We send the request to TD Ameritrade, and then send however much money you want over to Directed IRA.
Now, can I add at this point?
Now, it does get complicated, but those are some low-hanging fruit here.
Yeah, and I guess I'm sensitive to the fact that this is your hard-earned money in your retirement, and it's always nerve-wracking. Even Patty was like this week, like, okay, hold, that's the right form. Where's my money going? I'm like, it's going to go into an account here, and you'll get an account number assigned, right away. And she's like, okay. And so, because I'm sensitive and understand that this can be a little nerve-wracking. It's something new. Anything new can be a little scary. So that's why we're going through these mechanics. That was the purpose of this podcast. So when you get to that portal, you can set up that account online, right there in the middle of the night, in your pajamas, no problem. Yeah. And then it'll take you to the next step. Okay, you're going to transfer money in, and then it'll ask for the next form that's necessary. Yeah. So,
because that's the key is you need to make sure you set up the right account so that transfer happens properly. Okay, and that's the biggest takeaway here, really, at this stage is the mechanics matter here. We need to make sure this thing's going to run, right? Day two is I want to make sure that transfer actually matches up. So,
because you might have an investment 5 days from now. And you're like in a big
roll.
hurry.
Yeah.
I mean, I got some crypto I want to buy before Friday right now.
Yeah.
So I'm like, when's my money going to be in my account? I'm calling team members. They're like, chill, you know. And Matt's like, quit bothering the team, you know. Yeah, no,
That's their job. That's all right.
But no, so if you want to make sure these mechanics, you're dotting the I's, crossing the T's,
Yeah.
call if you have any concerns. Okay, but I like that. Those are the first two. So
Yeah,
IRA
those are the
to
first
IRA,
two and the
Roth.
very most common. But the tricky one is going to be the 401k. All right, let's say you have the old employer 401k. We have a lot of clients that set up their self-directed account here, and they're moving an old employer 401k over, which is a rollover. Now, how do you know what your old employer 401k is? It's confusing. And what IRA account do I set up for my old employer 401k? So again, we're back here. You got your statement. Now here, you got to know how to read the statement for your 401k. 401ks don't say traditional and Roth on them. Some do, but most don't. What 401k providers like to use is industry lingo that people don't know what the hell it is because it makes them feel smart, okay? So what they do is they call it pre-tax. That means traditional. Or post-tax. That means Roth. So if your 401k statement says you've got $100,000 of pre-tax dollars and $50,000 of post-tax dollars, that means you would need a traditional IRA to receive that $100,000 of pre-tax dollars and a Roth IRA to receive that $50,000 of post-tax dollars. Sometimes you have a blend of both, but you can't receive it into one IRA account. Those are different types of dollars. Now, you don't have to move both. You could do one or the other, or you could do both in the example I gave there.
I like that too because it gives you, again, freedom. This is the feeling we're going for, is we want freedom and control. And those are powerful feelings. And when you're like, oh my gosh, I now know what's in my 401k, and I can transfer that over to the right IRA account, and you can invest those differently. You may say, the traditional, I want to go into a crypto type IRA, or I wanted to do a regular IRA.
And do a real estate deal, or a note, or a private fund, or
all sorts of options.
Whatever.
And then the other one could be Roth, and you go, ooh, I have a different idea for my Roth. I want to loan that out in private notes. Or there's a syndication that I went to, and I've got a really good, exciting deal over there. So that gives you freedom. So when you get don't see this as a burden. See this as really exciting.
Yeah.
Because
this is you taking control. I mean, you know, there's the one thing of taking control is you have to do something now. Okay. The reason you haven't loved your retirement account before is because it's been investing in something you don't even know what the hell it is. Okay. And it just goes up and down based on the stock market.
Okay. And let's also just hit some of the basic ones. Like if you have an HSA, no brainer, I'm going to open an HSA. Yeah. I have an ESA, one of those college savings accounts. Okay. I'm going to set up an ESA. So in those situations, it's very straightforward. Maybe you have an old SEP.
Yeah.
What would you do with that?
You have two options on the old SEP IRA. You can open up a SEP IRA at Directed IRA and keep doing SEP if you want to make those contributions. Many people move to a solo K, but you don't have to. I see some people who still like the lower cost SEP IRA. They're not trying to max it out. They're cool staying SEP IRA land. Or you could just move it to a traditional IRA. If you're like, well, I was putting a lot of money in the SEP IRA before, and maybe I keep the SEP IRA at Fidelity or whatever I'm doing, but I just want to send 50K over, 100K over for this specific investment. Well, SEP IRAs are traditional dollars. You can actually do Roth SEP IRAs now, but no one does them anymore. We barely see them. It's like a white spotted leopard, you know. So we typically do a traditional IRA to receive your SEP IRA dollars because those are traditional dollars.
And at any point, again, you can pull the ripcord and go, call.
Yeah.
And the team is going to go, all right, what do you got? Okay, we'll help you. And this is the account you set up. Then you can go back to the portal, take care of it, and get it done, and the team will walk you right through it. Now we get to, you've got this old 401k, and you're thinking, maybe not IRA or Roth. I might have something more creative I want to do. Where do we go there?
Yeah, maybe you are self-employed, small business owner, no employees, and you want to do the solo 401k. That's a little different, okay, because now you're creating a new 401k plan. All right. And of course, you can work with us to get it set up. Many people work with our law firm. They want some advice on how to set it up. So now if you did set up a solo 401k plan, you actually have an account in the plan as an employee. So, 401k, every participant in a 401k has their own account. And you might have a Roth account and a traditional account in your 401k at XYZ big company, or even in your solo 401k. So at Directed, you would have a custodial account with us that you can do Roth or traditional or a combination of both. Okay, so I know that can sound confusing. The solo 401k plan is your company that created that as its 401k plan for its employee. It just happens to be you, this awesome employee, okay? And then you have accounts. And so you create an account, which will happen on the Directed Connect portal. We do a lot of the docs when you're setting up the plan anyways. We keep it coordinated for you. Ask us questions if you have any along the way. Our team's here. But now when you're like, all right, now I want to get the money in.
Yeah, and I love that because I love the way you describe that, because now what we've done in our step 3 here is we've opened the right account to receive. And if it happens to be a solo 401k, great. And you use the law firm if you want to really understand that and have some creative ideas, or you can do it in the docs only right there in the portal. So whether it's an IRA, a Roth, a SEP, an HSA, an ESA, or even a 401k, you've now created in step 3 that account that's going to receive your money. So now, Matt, we're ready for step 4. Well, now we get into all these T and R words, transfers and rollovers.
Yeah, yeah. It's so exciting, right? Yeah. So let's talk about that, all right? Because this is how we get the money over. If it is IRA to IRA, whether this is traditional or Roth, you're going to do what's called a transfer form. IRA World calls this transfers, which is nice because if you have a traditional IRA at Fidelity and you're opening up a self-directed traditional IRA at Directed IRA, we're going to do a transfer form. They go quick. We submit it on our form, which you complete in the Directed Connect portal. Give us your statement so we can make sure it's right, and then we send that to Fidelity. They then transfer over the money. Now, I want to put one little note on this. No matter what you're doing here in the process of transfer or rollover, you typically want to be in cash in that account because you're going to transfer over cash to go make your new investment that's going to be self-directed. So if you're, let's say you've got a $300,000 account at Fidelity and you want to transfer $100K over, or you can transfer the whole 300, but whatever it is, you'll need to get that 100K to cash over at Fidelity. So sell whatever mutual fund or ETF or stock you're in down to get that to a cash balance.
And note to self, this is the beauty of this. There is no transfer tax. There is no penalty. There's no tax, income tax. There's no state tax. All you're doing is saying, Fidelity, bye. Hi, I'm home, Directed IRA. Please open the front door. I'm so excited. And so there's no tax along the way. A lot of people think they're taking the money out of their retirement account. That's why I like the word transfer. All you're doing is transferring it.
Yeah.
And so the IRS doesn't care. There's no IRS reporting for this because you didn't take the money. Do not do a 60-day rollover or let your financial advisor say, oh my gosh, you're going to get taxed on this. You're taking the money out. Whoa. If you think I'm taking the money out, we got a problem because this is a transfer.
Yeah.
And so you want to be confident that you're using the right words. You got the right account now where it's going, and you're going to use the T word, transfer.
Yeah, and as we've talked about already, and as you know, the only difference here is an account at Directed IRA, we don't just restrict you to stocks, bonds, mutual funds, ETFs. We let you invest in what you know, real estate, private companies, small business, crypto, whatever. We let you go into that stuff that you're excited about. Okay.
I think it's time for the Staples button.
Yeah, that was easy.
Okay, I think
simple enough.
Okay.
Yeah.
Yeah. Okay.
All right. Now let's talk about Now, by the way, transfer could be an HSA. That could be your ESA. Inherited IRA. Maybe you had an inherited traditional or an inherited Roth IRA you set up. Okay. We're going to just transfer over like kind to like kind. Okay. Think about that for transfers. Now, what if I'm going 401k to IRA though? That's not a transfer. That's called a direct rollover. All right. And now what happens there though is, let's say you have a 401k at Principal or Vanguard. Okay. Old employer. And let's say it's got pre-tax dollars on the statement of 100K. Well, you would have opened up a traditional IRA at Directed IRA to receive these pre-tax dollars, which are traditional dollars, and you will submit a form on Principal's form or Vanguard. The provider of the 401k and in the rollover world, they have their form where you instruct them to say, hey, I set up an IRA, another qualified account. This is not a distribution. I'm not going to be subject to penalties. Roll it over to my account at Directed IRA.
So I want to repeat this. So if it's a transfer, I can go to Directed IRA and say, hey, go get my money from Fidelity.
Exactly.
And we have the authority to go to Fidelity and go, hey, Tom and Mary said, screw you, send us over that IRA.
Exactly.
And they're like, bam, I wish I could have talked to Tom and Mary.
Yeah,
nope,
exactly.
Too bad.
Yep.
But on a rollover, you've got to go over to the provider, like the Vanguard, and say, okay, guess what? I'm leaving. roll this over to this IRA account. Oh, and those post-tax dollars that are Roth, essentially, roll those to this account. So you're going to fill out maybe even 2 forms with them.
Do 2 on that. Some of them you can do it on the same form. It just depends. And we can try to help navigate you. We've done it with all the big companies. I mean, we're doing this 100 times a day, almost some. So we're very familiar. Our team knows how to do these forms. But just know that the rollovers coming from a 401k is going to be a 403b, any employer-based plan, old employer. It's going to happen on their form.
Now, if I'm going to my solo,
and you'll tell us what's coming, by the way. So you'll in the portal. You'll say, "Hey, I'm rolling over. Look for this money. It's coming into my account." So we know it's coming.
I love it. And I went through that this week. That was part of our transfers. They were like, "The money's not here." Okay, we got it. It's just wonderful. Now, if I'm moving that money from that old 401k to a solo 401k, it's still a rollover.
It's still a rollover because it's kind of where is it coming from? Even though that's 401k to 401k, it's still considered a direct rollover because it's going directly into a new retirement account. It's no tax, no penalty, no 60-day rule or anything. It just is going right into the other retirement account.
Okay. Now, what's exciting for me to say at this point is that's it. 4 steps.
There you go.
You did an inventory. You figured out what the hell the account was. You set up the right account to receive that money. So it's like kind to like kind. And number 4, you filled out the transfer or rollover form. And baby, you're in business.
Yeah.
You are in control. And you know what? You know what the hell you've got too.
Yeah.
It's so exciting.
Yeah. Now it's like to show me the money. Okay. The money's there. Okay. It's sitting in your account. Now you're ready to do the whole thing you want to do in the first place. Go invest it in something you believe in. And that's your job to decide what you want to invest into. We're here to help you make it happen. And that's the beauty of self-directing.
Yeah. And this is the beauty of this podcast. Short and sweet. You needed to know those mechanics because I promise you in the middle of the night, you're going to go, ugh, why is this so difficult? And you may just have a little, again, fear and apprehension, and we don't want you to have that. And so now you know what to say, what terms they are, what they mean, and I think this will be a lot more pleasant experience in the process.
Yeah, and let our team know if you have any questions along the way. Of course, you can always book a call with our team. Our transfers and rollovers team is great. If you've already opened the account, if you still haven't even opened the account, you're trying to figure that out, work with our new accounts team. You can get all that at directedira.com. Thank you for tuning in today. Until next time, stay calm, self-direct on.